right now we're joined on the line by Graham Hefer. He's the CEO of Okomu Oil Palm. Thank you so much, Graham, for joining us. And I think a lot of people were excited about your full year results and the bonus and the dividends that the company declared. But of course, a bit disappointed at the decline we're seeing in revenues and profits for the first quarter. So can you just talk us through the pressure points?
Yeah, thanks, Wally. The major problem that we had in the first quarter was that we had some falling prices in our commodities. I think everybody is aware that the commodity prices worldwide are taking a bit of a hit, and it wasn't any different for us. Also, whilst we didn't sell a lot of our product as well. If you look at the first quarter, we have quite a lot of stock. So it's not that there are a lot of losses, although the prices have dipped. We are sitting on quite a bit of stock, and we are expecting that to move in the second quarter fairly quickly.
Right.
So it's not all doom and gloom.
Okay, so what can we expect to change during the second quarter and going forward in 2013, in terms of, particularly with the stock buildup that you just mentioned?
Well, yes, I mean, obviously we'll be selling that stock off into the second quarter. We hope that the prices don't fall any further because, you know, we are held basically at ransom to the world prices. We are a price taker.
Right.
We are hoping that things will level out or, in fact, increase again. We hope that will not be the case, and we'll be seeing any further drops in the price. And if that is the case, then we are hoping to have a fairly stable income from there until the end of the year.
Right. The weather is, of course, very key for agri producers like yourself. What has it been like this year so far?
The weather, luckily enough for us, seems to be playing along. So it's one of the external factors that, as you say, that we are very reliant on. But thankfully, it doesn't seem to be having a problem at the moment for us. So I'm quite comfortable that things will be working out in the weather, with the weather in the short to medium term here.
All right. Are we likely to see? Let me put it this way: your expectations for the rubber price, which is of course very key for your business. How do you see things changing going forward?
Well, in terms of the rubber price, you know, if you look at even from last year till up to date, our rubber price has fallen around 30%. You know, something that, as I said earlier, you know, being price takers, we can't really have an influence on. And as I said again, dependent upon what China and India and the rest of the world do, we're hoping that things will come right and that the prices will either stabilize or actually increase towards the end of the year.
Right.
So we can only hope that things can get better in the rest of the world, because obviously that's where we work on, and the prices take their cue from there.
Clearly, I think one area of improvement that we're seeing is on the cost side. I think we've seen some improvement there in your operating expenses. Can you just talk us through what has changed there and where you've seen the gains?
Well, based on the fact that we foresaw that prices would probably drift downwards, we've concentrated mostly on cost cutting. That's important for us because we have no other way of influencing our bottom line, being the price takers, as I say we are. So effectively, we have no other means of doing anything except cutting costs, making things more efficient, increasing productivity. So we're concentrating on that throughout the various departments within the company to see how we can streamline things and cut costs in order to make sure that our bottom line is not so affected.
Right. If we look further ahead, can you just talk us through some of your expansion plans? A lot of people talk about the opportunity in Nigeria, particularly in agriculture. I imagine that you're exporting some products as well. So talk us through how you're looking to expand your business.
Okay, good. In terms of the agricultural side itself, we are doing replants of our oil palm to put better varieties in. We have been doing that for the last 2 or 3 years now, where we've been planting up to 500 hectares of replants in order to ensure that we have a younger oil palm population as well, getting better varieties, increasing yields, because that's one other way of making sure that you don't have a problem with price, is to increase your volume.
Right.
Also, with rubber, we are busy expanding. We've just cleared around 1,200 hectares of land for new rubber, and we'll be planting about 700 hectares this year. We intend to try and do in the next 2 or 3 years another 1,200 hectares, which will bring our rubber plantation up to around 10,000 hectares which will allow the rubber factory that we have here to hopefully work at near capacity. In terms of the oil mill, we are busy right as we speak now with a 2 billion naira expansion of our oil mill, which will make it a 60 ton an hour, which will be one of the largest in Africa.
Right.
And we're hoping by doing that, along with the increase in expected yields we're going to get from our younger plantation, that we'll be able to put more palm oil into the market.
Right. Well, best wishes as you tackle this market. Thank you so much, Graham. Hefer is the CEO of Okomu Oil Palm.